So we do our own pre-underwriting, which is requested by the lender partners, and we look for several things. Number one, the revenue amount over the last 3 or 4 bank statements. We look at it. If we see that it's probably a seasonal business, then we're going to automatically um, uh, request from that client an entire 12 months of bank statements because we know that it's seasonal and it's not going to be known by the underwriter unless we tell them. So we look for that. Number two, we look for the number of NSS. We look for in negative bank days. That's really important because we know if it's right on the line, 5 or 6, we're going to go ahead and submit it. But if it's crazy, like 7, 8, 10, 12 negative bank days, now you might have 30 negative NSF, but they may have all come on one day, and we have to look at all that and decide if it's, we have 30 that because of one check that bounced from one of their uh, clients that was, when they were paying for whatever service they had. We look at all that. So, but even if there's anything in question whatsoever, we go ahead and submit it. We're not going to we're not the final underwriters. We're just kind of scraping through the file to make sure it's not blatantly going to be declined. And then we look at the uh, business start date. I mean, we have to because so many of them will put today's date as the business start date. And if we don't, then it's going to automatically be declined. And we got to go through the whole process of getting it up, out of the decline section and resubmitting and doing all that. So we look for that and get it all worked out beforehand. We also are making sure that the application signed by every owner. If there's 2 owners on the application, we got both of them have to sign the application, and it's all electronic signature. We get that done. Then we want to make sure there's at least 51% ownership that is shown on the application. Sometimes we have where there's only 20% here and 10% there on 2 different apps, and none of the other owners want to sign, but they'll give a board resolution. So those are all the things we're doing behind the scenes before we ever submit to the lender. Now, once offers start coming in, we wait for all the lenders to respond. And if they're slow responding, then we're going to contact them and see what the issue is that might be stalling them that didn't stall the other ones. As we talk about all the time, every lender is not best for every file. So we're really tailoring this for your client. Now, once we have all the offers, or at least 75% of them submitted to lenders, then we're preparing the offer to be presented. Now, we may go back and contact these lenders and say, listen, I got 2 of you almost identical. How can you make yourself unequivocally better than this other offer? And a lot of times I get them to extend the payment by 2 months, or lower the rate, or do stuff like that. And we have a system that we use to do that. The client is initially called by us because we want to talk to them before we just send the offer. Can't get them on the phone after a couple of tries, then we're going to have to, go ahead and get the offer out to them. We don't want to just sit there and hold it. When we call them, what we're trying to do is find out when will they be in front of a computer so that we can go over the incredible offers that they received. Again, if there's no answer, then we're going to text and email the offer in advance and try to work it through that. Here's what your offers look like for your clients that we're sending. Here's an actual offer. Great news. You've been approved for up to 109,000 in the business growth funding. This funding can be in your account as early as today and is designed to help seize opportunities, expand, or simply breathe easier during a critical season. We call this seeding the opportunity. In other words, we're going to be talking about, hey, what are you going to use this money for, and just really get them involved in the offer. Sometimes they don't even want to talk; they just want to say yes or no. But this is what we try to do. Now, in this particular case, it's a 12-month deal. So once you make your first 26 weekly payments, you'll be considered a client in good standing, which often unlocks additional stage funding with even better terms. What we're doing here is we're setting and seeding the stage for future fundings. That's why we get so many renewals. Many of our clients return for more as they scale, and we love rewarding loyalty. We've also added a unique bonus. You're eligible for our Connect Cash referral program, a way to earn extra cash simply by referring other business owners like you. Just ask us. So every paragraph there's an intentional statement being made to seed them for future funding. Now, here's the actual offer. These are two of the offers that went out. And the sale rate is a 123 for the 109 and for the 59. They qualified for this. As you see, the lender fee is totally waived, and then we have all the early payoffs and all that we go over on the phone. Now, this particular client doesn't want this much, so they might want only 20,000. If they do, we got the offer down to a 117 rate. It's certainly one of our core rates. And you can see that that's a 6-month period right there. Or we can give them the 12 months at a little bit higher rate of the 123. So that's how the offers go out to them. And once the client accepts the funding offer, we request funding paperwork from each lender partner that's sent, and then they send it directly to the client. They don't send it to us. They're not going to send it to you. If this is an A lender offer, then as in many cases, the client's approved for online checkout, and they're sent their portal reset where they actually change the password, and and put whatever they want, and that gives them access to their portal so they can always follow their funding and know how much is owed on it. These are for the A lender offers only. Then once they open the portal, they accept the funding, the funds are automatically wired after the signatures. A lenders do not usually require funding calls, bank verification, or really any other steps. I do know if they ever ask for a bank verification, which is 1 out of 100, it means that they see something that we may have missed, and they're just going to make sure that maybe this file came in 10 times and they've already seen it. Well, it wouldn't be that much with an A lender because they wouldn't fund it then. But let's say it came in a half a dozen times. Then they're going to make sure that they're not being double funded. When it comes to the B and C lenders and all the others, there can be additional required closing steps with some of the lenders, and these steps may include, and always do include, bank verification. It could be a link or manual. What I mean by that is that some files are really risky, and they will and the lender will only accept manual login where they literally call them, get their username and password. If they won't do it, then they're not going to fund it. But we use bank verification links, but there are some banks out there like small credit unions and small community banks. They're not on the big system that links either Decision Logic or Plaid. And if they're not compatible with those, then we will again have to do a manual login. Sometimes we'll let the banker send us their month to date, and what they're looking for. We want to make sure they haven't already taken funding, so that we don't get double funded. They're going to make sure that their month to date they're not crazy off from what they are accustomed to, and they're still on schedule to. I mean, in other words, they want to make sure it didn't drop off the face of the earth. And they chose to move forward with us for $75,000 with the 100% prepayment discount addendum. David mentioned this the other day, but they accepted the offer. They took the 75, and that was on December the 23rd. All right. Well, listen. Um, I just want to make sure everybody understands how the whole system works. I know you do because you're pros, but our lenders on the Bank Breezy platform, they all determine the client's funding amounts. It's never determined by us and what the factor rates are, and they do all that by assessing what the business financial health looks like through cash flow, and primarily they evaluate overall revenue as this produces insight into the business's ability to actually repay it. And then it talks about lenders also consider the length of time they've been in business, the industry type, what kind of existing debts or financial obligations that they may have. And ultimately, the funding amount is tailored to each individual business based on an awful lot of different factors. But the pro tip of the week is, people are asking, why is it that I submit a file, they're doing this amount, and I'm getting 25%, not even 50% of their monthly revenue? I want to give you some factors that come into play. Number one is the credit profile. If it's really, 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 really bad, so or even not so great at all, and it's not extremely bad, that's going to determine how much that each one of these lenders are going to risk. Of course, the industry type makes a difference, whether it's trucking, real estate, or a healthcare facility. The number of positions is a big one, and we're going to talk about that in a few minutes. The number of deposits. We have one today. I'll tell you a little bit about on their deposits, and then of course what their daily balances are. When it comes to FICO score, if it's below 600, it becomes a higher risk funding for almost every lender out there. So they're going to take that in consideration when they're looking at the file to see whether or not it's going to be 100%. And here are some of the high risk industries that are out there, like transportation and trucking is probably number one. Real estate, seasonal tax preparation, where they don't do any other type of accounting. They just do it during that season. Consulting, when we don't really know what the consultants are doing, we have to get more information before we submit it to be able to get a better look. But if they're doing 50,000 or higher, that's okay. Anything in energy and solar, because these solar companies pop up and go out of business very, very quickly. Credit repair companies, especially if those companies aren't legally compliant with the federal regulations for them. Certain financial services, and of course, family farms. These are all high risk ventures. So that makes a difference in whether they're going to get 100%. Then the number of positions. If our funding is a second, third, or fourth position funding, which we do all the time, then all the other positions that are head up can really factor in what they really can afford to pay. So if their debt to income ratio on just the funding, not on all their other bills, is 35% or more of the total amount that they're doing in monthly revenue. For example, if they're doing 100,000 a month in revenue and 35,000 of it's going to pay back positions in the system, then that's going to create problems, and that's going to determine really how much they're going to be able to afford. And then, of course, number of deposits. A lot of our lenders, well, almost all of them require 3 to 5 deposits. The A lenders, they'll take a minimum of 2. Some of them require 5. And the reason you want that is because I had a situation today. Their deposit didn't hit for the month of April, but it went into the month of May, and the month of May is huge. But because it didn't hit in the month of April, they really could not. They only had like 11,000 in revenue, and they already have other positions, so they really for that month couldn't afford it. Fortunately, they have such high balances on a daily basis. It was able to cover all that, and it's not an issue. But daily balances is a big deal. A lenders like to have 1,000 in daily balances, but I want you to look at this. These are the May bank statement of a business that that they were wanting to get. Let me make sure there's nothing to identify this business, and there isn't. They wanted to get in a funding of $50,000. Well, you're looking at their May bank statement summary.